Good afternoon, everyone. BC Richfield coming to you live from London. Apologies, running a couple of minutes late, just a couple of technical issues, but we're all good now, or hopefully we are anyway. Do please let me know if there's any problem with the sound or with the video, and we'll look to address that. If not, then we're going to crack on and try and stay with this slightly shorter format here on a Monday. Going to take a look at Bitcoin, going to take a look at ES, quick look at the DXY as well, because there's some interesting parallels with that. So big shout out to everybody that's made the stream live today, and also to everybody that's watching this on recording as well. So without messing about too much, let's crack straight onto it. Craig Parker, good morning to you, my friend, and good morning to everyone else as well, or afternoon or evening, depending on where you're tuning in from around the world. So I'm just going to dive straight in today, guys. If you've got any questions, do pop them in the chat, and we'll take a look at them. So I wanted to kind of cover on and carry on for my Bitcoin report. So I write the company Bitcoin report on a Sunday evening. Really like doing it on a Sunday, actually, because I think Sundays are a really good day to get ourselves aligned with what could potentially be happening in the week ahead, and also a good chance to review our journals and take a look at the week before. Fermi, hey, buddy. Good to see you again. So what's the key kind of takeaways from this, really? Well, we've got sort of some high time frame levels drawn out here. Let me just get rid of this for a moment, clean it up. So the main this is the thicker lines here represent our high time frame levels. And basically what I'm looking for, what I'm always looking for is, what's capping the market? What's stopping the market progressing higher? What's stopping it from falling lower? Our key points and interactions with support and resistance levels. And then these draw themselves out into ranges. We take this lower range here, for example. What we've done is just take this key resistance and support level here, the same as this one here, and then split it with an EQ, right? So that's an equilibrium, just basically meaning a midline that you'll see in a channel. And you can see, as we look through here, how well supported these EQs are, right? So we've come up here, obviously we found resistance here at the top of this trading range. We've rejected, come down to the midline, been held under the midline, traded to range low to high, high to mid, hold mid, back down to low. All right, that's typically what we're looking for here. Doesn't always work out. You can see here, we came up low to mid, held mid, made that push for range high, showed a lot of weakness. But what that does tell you, and what you can interpret this as, is when we fail to take range high, look at what we've done in here, right? High to low, deviation above it, close back in, aggressive sell-off to the lows, high to low to mid, low to mid, not to high here. So what does that tell us? And that can tell us that we're seeing weakness, all right? Now, obviously, all of these things are a lot easier in the power of hindsight, but what we had in this situation, something similar here that we had here, just over a different time period, which is we're taking out stops, yeah? So we're hunting liquidity above these highs. Why? Because that's where people's stop losses are that were short, and that's also what will trigger certain breakout traders. That generation of liquidity here, because obviously anyone that's short here, their stop loss becomes a forced buy order, a market buy order. And the same for breakout traders who are coming in here as well. They're jumping into the market. So what it does is creates a lot of buy orders, which large accounts can target as sell orders, right? To fill their sell orders. Sorry. So the whole idea of generation of liquidity. That's why for me personally as a trader, I'm always looking and saying to myself, okay, where's the obvious liquidity sat? Yeah, where's the obvious liquidity resting? Any clusters you get like this? Yeah. Any what I would call naked highs? Yeah, which are basically where we expect liquidity to be resting. Yeah, we can see when price got up here, it got rejected. We can see those long wicks showing the sell pressure. When we get back to that area, we assume if there was a high amount of selling taking place there before, that could well be the case again. And that's what we target with these levels. So our key levels and where we believe liquidity is resting. Then all we're looking to do is plug in our high time frame bias, yeah? And from there, that's where we create our ideas around our trade setups, okay? Bernd, Nitpar, CS Lychee, good morning and good afternoon to all of you. CS Lychee from Morocco, wonderful place. Look at some really good Moroccan friends. What a beautiful, beautiful country. So yeah, welcome everyone. Welcome. If you've got any questions at all, guys, please do just pop them into the chat. So we're here on the daily. Quite self-explanatory, right? We're trading within larger ranges, like this one, for example, if we looked at this as a range high and a range low. Now, I would actually have this as my range high, right? Just because this is clearly capping the market here. Resistance, resistance, resistance. Found resistance again up here. That's why in the report last night, as I had been saying for the week, 24,277 is our key level. Why? Because we struggled to get above it here. And then when we did, we had this deviation, came back in, retested, and had an aggressive sell-off. All right. So there we are. Steve Etienne, my man, sharing some good bands with me this morning on Twitter. Enjoyed that very much. Makes me want to watch Austin Powers. So looking at this as the larger range, here's our range high, here's our range low. Deviation, big sell-off down to the low. Larger deviation here, get back within this range, and then we just pop aggressively to the top. So what's that now telling us is saying, well, that's why I think this level here, which for me, trading on Bybit, and guys, if you want to get our calls and trades and bits and pieces, I'll run you over some of the winners later. You can trade with us for free. All the information is in the description if you want to come and join us over at Bybit, or come and grab yourself a free trial for the Nest Club. But 24,277 for me on the futures exchange on Bybit, that's the level that I'm watching. We can see how we came up, and we really just tagged that almost to the dollar and then sold off aggressively. But when we reclaimed this, and look, we had little closes here, right? But look at these wicks, still showing a lot of sell pressure, right? So that's where we are. Now, I don't know if you guys can see this clearly. I hope you can. This thinner dotted line here. Now, the reason I was so interested in this is because of this swing higher. Whenever we see key swing highs or lows like this, especially when you've got these wicks showing absorption, meaning that you can see sellers are really stepping in here, or people that have bought lower are looking to offload their positions. Why is this so interesting? Here we go. Let's have a look. Yeah, here, swept those, sold off. Swept that, sold off, right? So naturally, this line here, when we see we had this interaction with it, we got a very similar situation, right? So for me, that's our real kind of key target now, is saying, okay, can we get back above this? And basically our line in the sand is that. Reclaim this. And we'd obviously look for this on a lower time frame, right? But lower time frame, we want to see price come up, set this initial spike above it, which I like to see. Then I want to see it reclaim it and retest it, right? Then when we do something like that, let me zoom in and get rid of that rubbish line, but let me zoom in a little bit to show you what these squiggles mean and why they're just not random lines, right? Because normally we want to come up and see an interaction with the line, see it respected. Then we want to see a clean impulse breakthrough, yeah, like ICT would call displacement. And that's very important to how I trade that. I want to see the impact of the move through resistance or through support, because it gives me an indication that the bigger players are stepping in and the market could be ready to move. 1 second, just going to pour my Yorkshire tea. Lovely. Right, so what we want to see is acceptance above this level. Often the first pump above it that you get is a very dangerous place to get in, because we don't know if this is a deviation, yeah? You can do one of two things. You can just wait for this level to hold, right? Got really bad at drawing these lines today, right? Wait for this level to hold. If you were waiting for that, yeah, then you'd want to see this used as kind of support and resistance, yeah? So basically, sorry, that's a really awful way of framing it. You want to see this flipped from resistance to support and it being respected as support. Then a clean break above that gives you a trigger to go long. For me personally, I play it slightly differently. I wait for this higher to form. So I wait for the impulse move through it, yeah? And then let me just drop this down very quickly to a lower time frame and I'll give you an indication. Right? So the reason that it can be dangerous playing these initial breakouts is if we're looking at this high here, yeah? Let's just draw that across. Now, as we break out here and we come back down, you notice we don't get the retest. Price just drops through, yeah? Then when we get back above it here, what you'll notice is we do retest it here, but we're not, again, this is our first purge above, right? So this one purged, broke down, yeah? So then we turn our attention to the next one, right? Which is this for me, okay? So this comes up. Then I want to see price find acceptance here, which it hasn't done yet because it's retested this. Now, purge above, holding this high. Holding this now as support, impulse move higher. Should we get price come above here, yeah, and start to find support, then on a lower time frame break of structure, right, I'd be looking for something like this, yeah? We see this purge above, same as we've kind of got here, yeah? Break above, holds this level, breaks above this swing higher, breaking market structure on a lower time frame. I'll show you the example of what I mean on the CRV trade that we took. I posted it on Twitter, and one of the many trades we took this week with the group. And I'll show you how we would look to execute that on the lower time frames. Okay, so nip par. If that answers your question, mate, hopefully, if for any reason I forget, do give me a shout. Okay, and I'll jump into that and show you the execution of how we'd look to trade that. Now, something that is interesting me here is this liquidity resting below here. Right now, if we can come up, we can take out this high now. We can start claiming above that. Then I'm targeting this level here, all right, which is 26,536. And Burn, love the reports. Needs more emo appreciation. Yeah, thanks, mate. They don't always get the highest number of stickers, but I think people kind of read them and then don't leave a response. But yeah, I like doing the reports on a Sunday. Actually, gives me a really good heads up for the week ahead. So for me, I've really got kind of two options here. Either we continue to show strength, right? Do something like this, like I said. We'll just do this in a real kind of basic. Yeah. So we'll look at something like that. Obviously, there'll be intricacies in this, which we'll dive into lower time frames to look at as well. Or I think if we start breaking back below here, yeah, then... Oh, sorry, wrong one. If we start breaking back below here, something like this, normally kind of mess around with it a little bit, come back and again start finding that, then I'm looking for this, but via this liquidity line, right? So I'd want to see price breakdown, struggle to get back above, a break of this level here, would be the key thing that I'd be looking for, right? Break below, show weakness, hold here, right? Purge below this, we almost certainly get a reaction off of this low. And I'd be looking to trade back either into a fair value gap or a breaker within here on the lower time frames, which I'll take a look to show you that. So that's a really good point there, actually, Burns. So we need a nice indicator to show displacement casuals, visualizing displacement, TFO. Haven't used that actually, mate, but definitely a good idea for people that want to look into that. A big part of how I trade is looking at how price moves through a level, right? So while we've kind of got the context of this, let me just really quickly just review one of our trades from last week. Where are we? CRV. So in terms of execution for this trade, right, this was just based very simply on two high time frame levels. This is what was capping the market here, right? Bearing in mind we're on the 4 hour here, but look, resistance, 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 resistance. Flipped this, yeah? So again, initial purge through, come back down. Purge through here, come back to this key level, hold support at this key level, and then we're looking to execute. So what does that execution look like? I have a few different ways that I enter trade, but typically I'm very, very consistent. So we see we came in, we took out target 2, which was down here somewhere, and then we came within like 0.003 of this extended target 3, right? But we'd only held 20% of our position there. We'd taken a cash out here, and then we'd obviously taken some profit at these equal highs here that we'd run. But just to give you an example of what I mean. So here's our resistance line, yeah? This is what we want to see flipped. So what I want to see is a couple of things. First thing, I want to see some lows swept. Generation of liquidity, right? Taking out stop losses below there, triggering breakout traders, generating liquidity that can be filled by larger accounts to push price higher. Clean swing higher, right? So what we're looking for, price comes up, purges liquidity, right? Then we get our change of character here leading to a break of structure. So what do I mean by showing displacement? Now, see this move here? See these 1, 2, 3, 4 bullish candles. You see how there's like an impulsive nature to that, how it's punched through, yeah? As it's looked and it's come and it's pumped above, right? Then what we're looking in is comes back up. I want to see a couple of things. I find for crypto personally that one of the best trade entries are using breakers. Now, What we're looking for here is it's almost like sort of an order block. Yeah. So we're looking for the up candle that purges price lower. Then we want to see price reclaim this level. Yeah. And ideally, the icing on the cake here is within this move up, you ideally want to see some inefficiencies. Yeah. So market structure, fair value gaps, right? Inefficiencies, fair value gaps, where you're seeing this. It's like something that price wants to come back and rebalance. All right. So when we break above, we've got our breaker. We're looking for a clean impulse move higher, and then our orders go on the top of this breaker box. All right. And then we want to see that hold. We also use these to manage trades as we're going through them, right? So same thing here. We've got up to our point here, right? We've taken our first take profit. Now price has broken down. We're saying, okay, well, what we want to see here is this breaker. When price gets above it, you see how it's acting as resistance, 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 flips to support. When it gets its acceptance there, it really starts to fly. Now, the other area I was looking at here was the order block in this region. And as we play that forward, we can see once again how it acted as resistance. And then when we flip that to support, it gives us that much more confidence to stay in the trade, right? Then we just manage it on the way up. And the reason this blue box is in here as well is when we were holding that final 20%, I said, I want to see this blue box hold. If we start breaking down, retesting below, then I'm going to close the remaining 20% of the trade. All right. Always remembering that trade execution is one thing, risk management and trade management are really, really key as well. Celtic Dragon, beginning to understand this much better. Currently have FOMO about missing this breakup though. Yeah, do you know what? It's very, very difficult, right? When you see these big breaks, especially if you've got the idea or you've kind of had the forethought to see these kind of things happening, and basically you think, you know what, I think the market's going to move, but maybe the move kind of takes place overnight, leaves you behind. The absolute key thing to do is to say to yourself, right, okay, I'm not going to FOMO into this move. But something that you can do in terms of this is, look, if we're here, you know, let's just say, for example, if our target was higher up, let's imagine we didn't have these equal highs here, because for me, that's a big risk. There's typically lots of liquidity sitting about, lots of liquidity, but a lot of potential for your trade to be flipped above there, because again, big players can look to target these positions to fill their sell orders, right? Try and convince the market's going up, deviates, and then breaks back down. But when we're looking at trade management, if we're absolutely convinced our trade is going to get to here, if we've got a very clean target, a high time frame levels align, obviously everything's in line with our high time frame bias, then when we get to this point, let's say we get to here, yeah, and all of a sudden we've seen this big run up and people just really want to jump in here, right? This is just this is a perfect example actually of the market. So you get your breakout here. Someone either didn't believe the retest, right, or maybe didn't get the retest, or just had a lack of conviction. And then all of a sudden they start seeing price move up like we get here, this big move higher. And what happens is these people start to FOMO in, right? So they've got in too late. So maybe they come in, stops under this low. Maybe people get in even later, stops under this low, stops under this low. What typically happens is price then finds a point. It then rejects down, cleans out all of these stops, comes back up again, just enough to dip down and take out these people as well before really flying a lot higher. All right? Ignore my horrific arrow. So, let me just clean that up. That's the reason that we'd think to admit, because everybody does it at stages in their trading career. Whether it's something you pursue professionally or whether it's something that you do as a hobby, it's so important to avoid these moves. And something that I like to do if I see them, I think, okay, well, look, if I've got conviction we're going to a higher time frame target, I don't want to FOMO into this, right? I can just simply take a Fibonacci, right, for the run up, which is just the impulse leg that I'm looking for. So we can see here that it's this. And then I'm just going to turn this into the regular Fibonacci. And then I'm looking to target the golden pocket, right, which is the 618 to 0.66. Now, as we see price retrace into this, yeah, you can do one of two things. You can take a risk and enter the golden pocket, with your stop loss below this low here, yeah? Or you can wait again for the market to give you an indication that it's ready to move, right? So what would that look like? Let me just clean this up for a second and let me just lock this and then just, right, there we go. Stops it being so twitchy. So remember what I said. Remember the whole key reason that we took this trade entry down here, yeah? What did we have down here? We had a sweep of these lows, break of structure. Here's our breaker block, impulse move, retest, and away. So all we can do is apply the same theories here. We've got beautiful liquidity sat under these relative equal lows here, which gets swept. What did we say before that we wanted to see? We want to see the change of character, yeah? Meaning that initial structure break, yeah? So low, lower high, lower low, break of this high, yeah, is where we get our change in character. So when we get that, we're looking for this impulse move through it. This candle here shows a lot of displacement, right? So once again, we would then be looking for the up move that led to the drive lower, which becomes our breaker. And we can see here that we get 1, 2, 3 candles. Yeah. So if we'd opened this position at the close of this candle because it had broken structure at this point as well and had a market structure shift, then we would have entered on this retest. If we'd waited for this to close, we would have got another candle and then we would have got our entry here. All right. Now, remember, this is only if we've got very strong conviction that we've got higher targets, right? Because with these equal highs here, this would have been probably too risky from a risk to reward perspective. So let's look at our R to R. We would have had to have our stops under this swing low, all right? Otherwise, it would have just been a bit irresponsible because you wouldn't have had anything to anchor it to. And then if we were targeting the equal highs, maybe we would have done on a half position size, 1.43R, if we had strong conviction. But if we had strong conviction that price was going up to here, which we did, then we've got a 2.7R trade here. So you've missed the initial entry, right? Refer to your higher time frame. Stop getting caught up just going too deep into the lower time frames because look at all this noise. Yeah, you look at all of this noise, and then we drop ourselves out to a 4-hour chart, right? And look at this lovely uptrend that we're in here. Yeah, so at this point, the market hasn't given us any reason to be bearish because it hasn't broken down. Now is a little bit different, right? Because we're starting to shift structure. We've taken out this low. So we've set a lower low. Now it looks like we're coming up to set a lower high as well. But at this point, we're only bullish. So we say to ourselves, okay, well, if we're going for these equal highs, which are equal to these as well, then where's our next upside target? For that, we need to zoom out a little bit further. And that's where we got this target from, right? You see how we came like 0.003 away from tagging this, right? So we're bullish. So again, we've zoomed out, used a higher time frame to set our bias. So we're saying, okay, well, if we've got higher upside targets, yeah, at that point, those hadn't been tagged. These hadn't, neither of the upside ones. Don't FOMO in. Wait for that big move higher. You very often get a retrace, yeah, and then decide how you want to play the retrace on that, all right? So that's how we'd be looking to enter these. So let's just have a very quick look. We'll close with some high time frame on Bitcoin as well. Sorry, so we were on the daily, weren't we? Bear with me 1 second, guys. There we go. So this is where we are with our current thinking, right? Just clean this up. So for me, we break and hold above this level. We're targeting here. If we break down from here, we need to be aware of this inefficiency sat here, this large fair value gap on the daily. That's going to provide a real draw for price. Price tends to want to rebalance those. So let me get rid of these. Let's drop down to our 4-hour chart. We can see these here all in line with the bullish bias, just taking our setups as they come into us. Again, here, look where we got this entry on this one, right? Let me just drop this down here. So this is a really, really good example, in my opinion, about how we can avoid FOMO. So we come in here, right? And for those of you who don't know, I like, my favorite session to trade is the London to New York crossover, but mainly the kind of New York AM and PM sessions, which are denoted on this chart here. Now, when we've come and taken out this high here, yeah, or we've got back into structure. Say we've missed the move down here, which was London Open, price has run away from us. Right. So all of a sudden, there's a real FOMO, a real panic for people to FOMO in here. Now, what we're saying to ourselves is when price has had that initial run, if we've got a clear upside target, see our high time frame level here. Now, price has got acceptance above this level. We're seeing price consolidate here. Yeah. We can see we're getting a low time frame slope, right? So we come back up, start to break structure down here. Well, we need to trade with our bias and with our conviction. So all I'm doing when we get to these trade sessions here, I can see the higher targets. I can see that this is consolidating after a big impulse move higher, showing strength. I'm then looking at the DXY to make sure that that's still looking weak or certainly isn't starting to show any significant signs of strength. And then I also look at ES, the S&P 500 and the NASDAQ, see what they're doing. If they're showing strength or they're not showing a large amount of weakness, then they're normally good correlated points to consider, right? Now, exactly the same here. Sweep of these lows, just nip a bit of liquidity, look at the impulse move through here, look at the strength in this candle. We then continue up. Here's the up move that led to the move lower. This becomes our breaker. Yeah. This is then traveled across. You have all these opportunities to get into the trade here. Stop loss under here. Very, very clean, very easy upside target. They obviously don't always just shoot to the moon like this, guys. But the reason of kind of highlighting this one is because we could have easily tried to FOMO in around here and get chopped up. But if you just know the areas that you're targeting, the entry mechanism, then you can kind of, you give yourself a much better chance of success, in my experience anyway, and certainly from the experience of any top traders that I've had the pleasure of knowing or working with over the years. So there's not really much more to say on Bitcoin. I think it's pretty clear here. Price is kind of still trapped in this little consolidation. Natural for it. Heads in on a Friday, normally consolidates. You look at Friday's range, yeah. So, or not Friday's range, but the mother bar that I was looking at that was set on Friday night. Now, do this if you get the opportunity to do it, because I always find it quite interesting how often it does this. So, you get that. Get rid of that. I'll just make these a bit thicker, and I'll make these like purple so you guys can see them a bit clearer too. So this is our mother bar candle, right? So the inside bar pattern happens when we get our mother bar, this large candle here. The next candle closes within its high and low, forms a mother bar. That's the mother bar, but the pattern is called the inside bar pattern. Now this high and low acts as a little range for us, yeah? So what we do is we mark the high and the low, and like any range, when we tag the high of the range, we target the low. Yeah, so deviation comes back within, targets the low, and very often at weekends, if we now drop this back down to a 5 minute again, take a look at our chart here. The Fibonacci that I just put on, by the way, you just have to ignore this red line for a second, right? So it doesn't get confusing. But this Fibonacci I just put in here, do it on a 15 minute actually, is just representing the channel EQ. Yeah. So that was the high, that was the low, that was our inside bar. So if we wanted to trade this, I wouldn't take this here, not when we're trending so heavily. And I very rarely trade weekends, although CRV was an exception to that. But deviation, close back within, we target the lows via the midline. Yeah, price comes down to the midline. We can see it's respected here as support, comes down, support, breaks through aggressively, retests it, confirms it as resistance, sells off to the range low. We then deviate the range low, come back in, form bullish structure, find resistance here at the EQ, and we've now broken out from the EQ as well, right? So that's how you can look at these kind of little compression ranges. So that's where Bitcoin is currently trading. So we want to see it break out above this or below it, yeah? And then when we go back to our higher time frame, all of a sudden we're saying to ourselves, well, that kind of fits in with what we were discussing anyway, because we wanted to see a break below this level here. Yeah. So that's where we go. And then, or a break above this high, which again is in line with where our red dotted line is. All right. So again, at the moment for me, I'm flat. I'm showing caution. I'm trying to work out whether this is a deviation. If we climb back within this range, I think we go lower. If we hold above this, then I think we test this level above. Leanne, good morning, bud. Good to see you on the stream today. Good morning. Feels like everyone, including me, is waiting for price to flip the 25.5k area. Okay, how would you trade it if we just rip right through that level when we don't get a retest of it? That's a really, really good question, Ian. So let's take a look at it, shall we? Now, the first thing that I want to do here is go to my weekly chart. Weekly chart for me is where the weekly onto the daily. That's when we're really building our high time frame bias. All right. Now, the weekly chart is where I get this level from, right? Why? Because this is what's capping the market for me. We came up and set this high, resistance, deviation, sell off, resistance, resistance, deviation, swing fail, big sell off, right? Into where? Into this support. And why have I got this level on here? Because look, again, weekly level, right? We set this high, failed to get beyond it, closed beyond it, retested it, sold higher. Brilliant. We then came down, lost it immediately, retested it, sold off lower, retested it again, leading to an even larger sell off, deviated the range low, yeah, step back into the range, up to the mid, see how we went straight through this, yeah, and then came down, found support here, giving us the platform to push higher. So when people are talking about, for me, the level here that we're talking about is 25,199, right, which is here. So I know people with sort of different levels and bits and pieces as well, but right now we're above this key level, right, which was 24,277. We're holding that. But now we need to see a sustained kind of hold here and a push higher, which is why we're kind of caught in that range. Now, to answer your question, let me give you an example of it, right, in previous price action. So you're saying if price really kind of has an aggressive rip through the level, what do we do to get in? Well, for me, it doesn't really change, yeah? So if I've got conviction that price is heavy, meaning that I've got a bearish conviction here, which obviously we had back here on a weekly scale, certainly, and daily, and we miss this drop, just for argument's sake, I know this is a weekly chart, right? So I know you'd have to be trading a very high time frame, but it's just to show you that the premise never changes, right? What we want to do is we want to wait for price to indicate where it's going, right? Then we want to ascertain if there's targets for it lower down. And if there are, and we maintain our bearish bias, then quite simply, I'm waiting for price to come into a level that I'm looking and ready to trade it, right? So either using Fibonacci retracements, yeah, or specifically looking for the indications that the market's leaving us, right? So if we look here, we can see this weekly fair value gap, right? Now, when price comes down and starts to consolidate here, these often provide a real magnet for price. Price wants to rebalance these areas because look, such a lack of orders here. Price just found there were no one willing to buy it here. Buyers down here because we can see the strong reaction, right? But when price tried to find buyers here, there were so few, the price just fell straight through it, right? So the market's now rebalancing that. It's people buying as we come in to this level. Then what I'm saying to myself is, okay, if I'm expecting price to break down at a point here, I'm looking for indications on that. And for that, we can use a number of things. We want to see price come into this area, and then we want to see a market structure shift on a lower time frame, all right? So because this is a weekly chart, let's just drop down to a 4-hour here. Yeah, because there's no good trade going from a weekly chart to a 5-minute, right? You have yourself chopped up all over the shop. So on a weekly scale, we can just look for our structure breaks, right? And market sweeps. So price comes into the fair value gap here. Yeah. Our premise is that we're still heavy, we're still bullish. We're waiting for the high, the low, the change of character, which happens here. Yeah. Displacement, which happens here. Yeah. And then we're looking for price to come in and fill the order block that sends the move higher before it goes lower, which would have been this here. And then we'd be selling off where? Into the key targets that we have below these lows, or the order blocks that exist. Sorry, let me zoom in a bit. So below these lows, right? So price is fractal. So for me, it works the same, just depends the time frame that you want to trade it on. So if our high time frame bias is telling us we're bearish here, we come into our fair value gap, yeah? We come in here, we set our high, we set our low, lower high. Market structure break is here. Right, again, we're not FOMOing in down here, are we? We're waiting for this displacement. Yeah, we're waiting for this big candle to go bang and punch through it, right? When that happens and price punches through that level, we're saying, okay, well, where was the up move that led to that displacement lower, which is our order block? So that then becomes our entry, right? And then we're looking to trade lower. Where to? Well, our first kind of target would be here because we've got liquidity resting below these lows. Our next target would be here, right? And then we can see again, we get this bullish reaction. We step back above this level. That's when we can get out of the trade, okay? Now, as long as our high time frame bias remains the same, then all we're looking to do is press rinse and repeat, right? So again, price comes in. This time we've got the extra benefit of seeing it sweep this high. Yeah, high, higher, low, high, low, lower high, break of this low. Yeah. So again, we're just following market structure here. All right. And then we come into this, you want to see the displacement below it, and you want to see price come back up here and retrace into this order block. Yeah. Then it sells off. We don't get the retracement on this occasion, but fine. We live to fight another day. But had we would have had the clear target of this low here. Yeah. And then once again, look, we just rinse and repeat. And then we wait for these larger moves. You catch these little day trades, you catch these scalps. But when we then get this one, we get the sweep above these highs. Price comes down, closes below these lows, right? We take that out. We see this lovely retrace up here, right? Into our area of interest, into our order block, and then we sell off. So whether we're doing this on a 4 hour, a 15 minute, a 5 minute, the key thing here is our high time frame bias. So once we've got that intact, Leanne, so I hope that answers your question. Once we've got that intact, then when we see these big impulse moves, we tend to stay away from them. Then we want to wait for them to retrace, and then we want them to tell us whether they're ready to go down and seek out the clear liquidity lower or the clear liquidity higher. Now, something to avoid, in my experience, is if you get a really, really big rip. Yeah. So, I mean, obviously, when you're in downtrends like this, you get these really big rips, but it can seem really, really tempting sometimes. When we get this, you see these little consolidations to jump in on the lower time frame and try and force market structure, right? Just make sure that you've got your parameters set. Yeah. So, for me, for example, I like using 4 hour for market structure. Yeah. So, what that looks like for me is this. So, if I'm on the 4 hour here, and I'll just give you two very quick examples, right? So we've got here, price comes up, the high, low, lower high, lower low. So we break structure down here, right? Because we've taken out this low. So from here, I'm interested in being bearish because we've changed character here. And then the retest of this level shows me that we're going lower. Then in terms of going higher, high, lower low, break of this high, here, this low. So from here, I'm going to be bullish. Yeah, because we've now broken structure back to the upside. So just bear with me a second, and then let's see if we can do this. Well, I'll do it on the 5 minute because that's the time frame that I execute on. All right. So that's why you see all of these trades here. My bias when we're this side of the green line. Yeah. So let's go and find our green line very quickly. And again, what you'll notice about that green line that I was making on the 4 hour is I'm not kidding myself, right? And saying that we got in at the origin of this move all the way down here, right? We've waited and waited. Look at this. I mean, how much would you want to FOMO in with this move, right? This massive pump above, yeah? But at the time, we couldn't take the trade because we had a bearish high time frame narrative, yeah? So even though it would have worked out as a lovely trade, doesn't matter. But we were also kept sidelined because we didn't get our rejection from this level. So if we were short, like we said, we need to see a clear deviation, price get back below, and we look to short it. We didn't get that, so it kept us out. However, we got our confirmation of the 4 hour trend change here. So I wait for my kill zones, yeah, and then I monitor price, and my bias is bullish. So I wait for my trade, I wait for the sweep, I wait to leave the order block for that to be in line with the fair value gap, retracement into it, price goes higher, right? Same thing here. The reason that this isn't marked up is because I didn't get the retrace, right? So we come into here, we swept this low, and I was speaking to the people at the Nest about this, really, really wanted to take this trade on Thursday. We took out this low. This was the high that we needed to break, yeah? But what happened was when we came up to here, this is the order block, right, that purged price lower. So we can see here, we just didn't get the retracement. This candle wick found support off here and went higher. Fine, no problem. Has our bias changed? No. We're still high time frame bullish. So we come into our kill zone area, sweep, big impulse move higher, right? I didn't take this one because we were going into resistance. I wanted to see this flipped. So when we came into here, approaching the PM session, Price ripped higher. Look at the displacement here, right? Look at the impulse move, market structure break, yeah? Then this is the order block that purged liquidity lower. So that's what we want to see retested, which we got here. And then the reason that this, which obviously looks cherry picked from here, yeah, is that this is the origin of the breakdown from this move here, which is also a higher time frame order block, meaning that when we purge liquidity higher here, taking out these highs, we closed below this low, right? So when we got that close and retest here, that order block that sent price down lower is always going to be of interest to me, as is this one that caused the move. So this block here was a key place to take profit. Fine, we got the rejection. We got to our take profit one. Price ran out, took out our stops. No problem, because our stops are at entry, right? Then all we do is the same. We've still got our level. See price reclaim it with an impulse move higher. AM session, right? Here's the move up that led to the move down. That's where we get the retest. That's where we trade it higher. If we'd missed that entry, we've now reclaimed this level. We've got a clear target above. Price does the same. This is the up move that led to the purge of liquidity. Impulse move higher, retest here, stops below here, trade into here, right? There was even another opportunity here as well, all right? So that's what we're looking for on those frames. Now, I wasn't going to do this today, actually, guys, but if anyone's got any questions, I will just take a look. Anik wants us to take a look at GRT. Normally do the requests on a Wednesday, but we've got a few minutes, and ES is pretty self-explanatory. It won't take me long to get through that, nor will it take me long to get through DXY. So let's do that, and we'll just do a very quick top down on GRT to finish off the day. Yeah. So the DXY, so the dollar index, this gives us such great confluence in terms of when we're looking to trade risk assets like Bitcoin. So I won't really zoom out on this one. I don't want to take up too much of your time. I know I'm going on longer than planned already, but these are all high time frame levels, exactly the same. Pardon me, as we looked at on Bitcoin, right? So high time frame order blocks, yeah, want to see these areas held. When they're held, they often act as support, yeah, and then we can even see the little deviation out the bottom of this level. Price reclaims this low. Look at that beautiful test, and then price is up. Now, this level is absolutely key for me, 103.848. Yeah, we can see the recency of this resistance, deviation, over, under, pop back above. Now, is this a deviation? Yeah. Is price now going to get back below this level and start selling off? If it does, good news for risk. However, if it starts to find support here, which is my current concern, starts building structure up, we've got clear liquidity resting above here. That will normally translate as bad news for Bitcoin and risk assets, all right? So I keep an eye on that. And then obviously there's ES, which is just a smaller contract, S&P 500, yeah, the minis contract. Let me just let the data load on this one. So interesting thing on this one that we've got here is we've got this H4 order block, yeah, which is actually a breaker, yeah. So up move led to the purge lower. See price impulse move above it, retests it beautifully, which always gives us extra confirmation. Then look at this reaction. So as soon as price comes back down here, it's a no-brainer that we want to be monitoring these areas, right? Why? Because whether you're thinking about it as institutions, whales, smart money, as ICT would call it, or however you want to view it, the people with the big bucks that can make the big moves, there's big buyers in here, lots of them, right? Or not lots of them, people with big money. It could be one person with billions and trillions they want to throw at the market, right? But however you want to visualize it, people have stepped in here, buyers have stepped in, right? So this is what we would see as the manipulation. This is the market getting driven lower to generate liquidity by convincing people price is going down and by taking out stop losses. Fills the major players' orders, big reaction up, retest it as confirmation, even bigger reaction higher. So I asked myself, if there was a lot of buying in here before, then would there be buying in here again and then possibly again? Yeah. The weaker the reactions we see away from this, like this one, for example, a little bit weak at the moment, but it is coming into this key SR level. For me to see this showing strength, I would want to see it just get back above this, retest it. And I think we can move quite high up into this region here, actually, because there's not tons within here. We've got clean highs, like equal highs resting across here as well. So I think there's every chance of that. However, obviously on the flip side of that, if we now do this, right, retest this, and this becomes resistance, then again, we're going to want to see some retest of this area from the breakdown. And then I think we're going to start looking to hunt down liquidity below these lows. If this thing really starts to drop like a stone or really kind of show significant breakdown, then I would be very, very cautious over other risk assets as well, like Bitcoin. And then let's finish up with GRT for ANIC. And then we might finish in under an hour. I mean, it's very unlikely, but I do try on a Monday. Never really seem to succeed, do I? So I probably, let me have a look. Here we go. Right. So GRT, let's just smash a quick top down on this then and see where we are. Obviously, we have to, no matter what we're doing, remember and retain our high time frame bias. Yeah. So, and also be aware of what the other correlated markets and counter correlated markets are doing. Right. Quick guzzle of tea. And we're away. All right. Yeah, you're welcome, Anik. No problem, buddy. So key levels here. I'm only really looking to mark up the absolute key things, right? So this, first of all, is a massive standout level for me. Going to do it in purple because it's a weekly. Key resistance, price sold off. Yeah, key support, sorry, price sold up. Found support, close below, retest, big sell-off, right? That's a very key interest to me. On a weekly scale as well, I won't leave it on here because it will clutter the chart, but we will be very aware that we're being drawn up into this fair value gap here, of which we're almost at the equilibrium, which is something to pay attention to as well. Again, there's not much price action here on a weekly scale, so there's not going to be much stopping this going higher. However, the other thing I just want to be a little bit aware of is this high, because that one there, I'm going to do it in purple and a thinner line, something clearly gave the market a bit of a kick in then when it got up there, right? And that's really made it drop down lower. Leanne, you're very welcome, bud. Hope it was clear and not too rambly. So what else am I looking for here? I'm just always looking for things that stand out quite clearly. I just hover the cursor over. And what a good way to do this, guys, grab your horizontal ray, which is this one, slap on your magnet, which you can do just by holding your command button if you're on a Mac, or the similar button if you're on a PC. And when you hold that button down, it just flicks your magnet on. Then when you let go of it, the magnet's gone. Helps you snap to key levels, right? Like this one. Why would I be interested in that level? That level for me has got a lot of significance when we look at it. All right. So support, strong close through, resistance, deviation, comes below, retests it, sells off, takes out liquidity below the lows. Now, we've had a big impulse move above this now, and we've also taken out this clean high here. So I'm then asking myself, okay, well, what was capping the market here? Yeah. And now I want this to be clean. I don't want too many levels on the charts, right? I don't just want levels on there for the sake of it. But when I look at something like this, right? Why have I picked this? So it's either that or it's the body of these candles that I really like. Yeah. And I'm probably going to stick with the body just because it's so much cleaner, right? See, the bodies have stopped here. Price deviates below, can't close until this one. Resistance. Big breakthrough, retest, price now moving higher. So for me, that level has significance. Normally, when we take significant levels, if we do this, we take our Fibonacci, and then we're going to draw in our... See how it almost sits at the bottom of that candle as well? Like these kind of things for confluence can be so key. So I'm just going to draw that in as a dotted line. And that becomes our channel midline, right? So now as we're diving through onto the lower time frames, yeah, we can see what a part this has had to play. Support around this region here, breaks through, price resistance, gets back above, resistance at the EQ, support, closes above it, pushes higher, flips this level here, which you'll be able to see if I zoom in a bit closer. Comes below it, retest, sell off, right? We can see the resistance. So when price then got back into here, had this level, closed, held it, and now we've pushed above it. Well, now we've retested and held above this level as well, haven't we? So now we're saying to ourselves, okay, well, what other significance is over here? We can see that this high is what price ran here before we got this rejection lower. So we can see the liquidity now sitting above here. So whilst we're holding a bullish structure here, which we are, right? So we've come in, high, higher, low, kind of a lower high here, yeah? But we're holding this at the moment, so we want to see how this develops. If we now drop this down onto our 4 hour, we can see price coming back in here, taking out this high when it's built structure higher up. What's it finding support from here? Right, so we're actually on the 50 line here, right? So this is still showing a bit of strength holding this, but my concern now is we've set the high, higher low, lower high, a break of this low, and all of a sudden we've turned bearish here on the 4 hour. So I'd be looking for price to move down towards the golden pocket here. Yeah. Now, let's not forget as well when we're looking at the chart, guys, always be aware of equal highs and equal lows. Yeah. So you can do yourself a favor as well. You can save them on here. Then you can just flick on, obviously not equal highs, but you can just flick onto here, right? Equal highs, equal lows, and then just saves you some time when you're annotating. So we're always looking for confluence. I'm going to pop on my B Pro as well because that's key for me. If we'd had a bearish divergence here, I'd give even more weight to the downside. But these equal lows here look like they want to be swept. So there's a lot of liquidity under there. Could we see something like this? Equal lows swept into the golden pocket. Yeah. Come up here, reclaim market structure. We would then target these highs. Yeah. And then we've got a really nice clean target above us, right, of this high. So all of a sudden we're putting a picture together. We're telling our story, all right, which is what I like to do. Then that way we're keeping ourselves in tune with what price action's doing. Now, if we don't get that, right, and we get price breakdown lower, well, then the Fibonacci gives us a little bit of an indication then, right? Because if price kind of takes out these equal lows, comes up, finds resistance here, and then starts to hold and break down, right? Then we have a day trade opportunity here into these equal lows, all right? The reason that equal lows equal highs, and they don't have to be exact, the relative equal highs, relative equal lows, as like someone like ICT would teach, which is absolutely right. You're just looking for points of confluence. Look, they're almost kind of there as well. Obviously, what we're targeting here, we can see market's been stopped here. It's been stopped here. We've had two of those effects. Maybe it happens again. So what do we say? Break below, hold below, probably searching lower. Yeah, which is these equal lows down here. All right. So that's what I'd be looking for on GRT, guys. I hope that's been helpful. Hope you've enjoyed the stream today. I'm going to let you all crack on. We're managing to finish this one in 56 minutes, maybe 57 by the end. So 3-minute victory on the attempt at doing a slightly shorter Monday stream for you guys. Going to be taking alt requests and FX again on Wednesday. So for now, do keep an eye on the stuff, guys. If you want to come and trade with us, you can get access to all of our calls for free just by using the calls only Bybit link, which is in the description. You can get a free trial for the membership as well. Come along and see what Nest Club is all about and what we do as a trading team. And also as well, keep an eye out later on today. We release our news update as well for the market. It's going to be another news-driven week. So we'll have the update out for you guys all later on this evening as well. Apart from that, guys, really appreciate every one of you. Nitpar Burned, Travel Troll, very welcome, mate. Thank you for joining the stream. Leanne, obviously, Anik as well. Celtic Dragon, thank you for popping along as well. Steve Etienne, CS Lychee, Fermi, Craig Parker, and everybody else that was on the stream today. Huge shout out to you all. We had a really nice high amount of viewers today, and hope you guys have found it insightful. As always, really, really open to your feedback, guys. So if you've got anything, then please do feel free. And Nit, if you ever want to pop over to the Nest, mate, you get access to picking my brain all the time. All right, buddy. And I'll catch you guys in and around Twitter. Have a really good week. Let's see how Monday's range develops as well. We're going to discuss that a little bit more on Wednesday. Okay? Have a fantastic week, everyone. Be safe out there. Trade well. And I'll see you all soon.